Beginner's Guide to Real Estate Investing 2020. Now, have you ever wondered how real estate investing works? That's an important question. Fortunately, the basics are pretty straightforward. And in this video, I want to give you the basics to start investing in real estate. Folks, if you don't know me, my name is Boston Dave Knight, real estate broker, and welcome to DaveTv. Among houses, apartments, offices, hotels, and industrial buildings, there's over $35 trillion invested in real estate. But how does real estate investing really work? Well, let's look at a simple example. So imagine you would purchase a house for $500,000, which you're going to rent out to tenants. Now, typically for a $500,000 property, your investment will include a 20% down payment, and that's $100,000. And the rest, which would be 80% of $500,000, which would be $400,000, you would carry a mortgage, typically a 30-year fixed percentage mortgage. So the $100,000 would be equity. And the $400,000 that you have with the mortgage would be debt. To simplify the math, ignore the closing costs and repairs. Congratulations, you own a rental property. Now what? Well, you got to place a tenant. I mean, your mortgage will be paid by them, right? Exactly. So let's say there's a similar house nearby that rents for $2,500. And you get that amount, $2,500. That's $30,000 a year in gross rental income. And once the cash is flowing, your total return is that amount minus expenses, taxes, and mortgage. The icing on the cake is the appreciation in your property value over time. So let's walk through this in more detail. You have to pay property taxes. You have to pay insurance. You might have a property manager. That's 10% of the rents. And obviously there's maintenance costs and other operating costs. So let's say that's an additional $5,000 a year. And your mortgage interest rate, that's your major expense. So your $400,000 mortgage might have a 4.5 interest rate. Why? Because you're an investor, okay? So that's another $18,000 in costs. Now, interest rate mortgage rates are pretty low right now. We're filming this video in August of 2020. So obviously as an investor, you're going to pay a higher mortgage interest rate. It is what it is. So $7,000 a year in residual income. $700,000 divided by your $100,000 investment equals a 7% annual return in cash flow. For simplification, we're ignoring things like income tax and depreciation. Yes, you get a depreciation schedule when you purchase a property. That's 27.5 years that you get to depreciate the property. Speak to your CPA about that. But there's more than just cash flow. You could also benefit by potential appreciation in both rent and property value. I mean, here in Orlando, we had a 9% appreciation in year over year for what, 3, 4, 5 years now. That's just absolutely insane. Plus, wow, since 2015, we've had a tremendous increase in the rental rates going up and up and up. So that's appreciation. The industry rule of thumb is 3% a year for appreciation. Altogether, you might make 7% a year in rent and 3% appreciation in property value. That's a 10% annual return over the long run. You can't beat that. So for comparison, the stock market has an average historical return of about 8% a year. And after you take out management funds to manage your 401k, you're going to get whacked hard. So your return is roughly like 3%. In fact, real estate has outperformed stocks over the last 30 to 40 years. But not everyone has the same time or money to be a landlord. So subscribe to my channel, to receive all the best tips to invest in real estate and keep on winning. Again, my name is Dave Knight, real estate broker, investor. Appreciate you all. Please subscribe, hit the like button, comment below. Appreciate you all. Until next time, I'm out.